Good morning, everybody. It's Friday, October 4th, 5:29 a.m. Central Time. Grain markets are mixed this morning. Matt Bennett is here. Guys, let's start off with this ADM story.
So ADM has suspended CO2 injection at its Illinois carbon capture and storage site. The suspension occurred earlier this week after a potential leak was found deep underground. The project is one of the first of its kind in the U.S. and is intended to be used as a tool to combat climate change. However, environmental groups in Illinois have voiced concern that the project could harm the drinking water supply. According to ADM, the situation poses no risk to the drinking water or public health. Back in August, the EPA discovered that ADM violated federal safe drinking water laws.
What an awful, awful PR story for anybody who's trying to build a pipeline, push carbon capture and sequestration. We know that farmers are already skeptical. They don't want the pipelines for a couple of reasons, safety being one of them, eminent domain's another one of them. It's just not a good look, Matt.
No, I mean, it's a terrible look. As soon as I saw this, I thought, what ramifications might you possibly have here? And it's basically what you're just saying. You're trying to build a pipeline. You say you need the pipeline, for all this renewable fuels build out. And quite frankly, Joe, I mean, I've been pretty huge advocate of we have to have renewable fuels as a demand driver here in this country. So this was not a good headline for anybody in agriculture, particularly ADM.
Well, you got to remember, farmers, I think, are torn on this. A lot of farmers don't like this. They don't like the idea. They think it's going to be a scam. They think they're going to end up with essentially no extra money, and that the companies or the ethanol plants or ADM or whoever, they're going to keep the profits. And maybe that's true. We don't know. We know so little about it. We still don't have government guidance on 45Z. We're missing a lot here. But this isn't Summit, but you've got groups like Summit who are trying to build these pipelines. And it's bad PR for them, even though it wasn't them,
Right. No doubt about it. So it'll be very interesting to see how this plays out. But halting because of a leak is it's very concerning. I'm sure it's pretty concerning for everyone in that area too.
I've got a copy of the letter that EPA sent to ADM. They've got three things that they've got to do here. Notify EPA within 3 days if you're interested in entering into an administrative order to resolve the matter identified. Propose dates and times within the next 5 days upon which to confer with EPA regarding the violations, and provide a written response within 5 days of receiving this letter, including explanations of a whole bunch of stuff. So I'm sure ADM has already done a lot of that, but not a good look at all.
Oil prices spiked on Thursday as the U.S. considered supporting an Israeli attack on Iranian oil facilities. According to President Joe Biden, the U.S. is discussing the possibility of backing Israel in its attack. WTI crude rose more than 5% to settle above $73 per barrel, its largest one-day gain in almost a year. Earlier this week, Israel vowed retaliation against Iran after it fired hundreds of ballistic missiles into Israel. A major strike on Iranian oil facilities could result in an additional $28 per barrel of oil and raise gasoline prices by about 67 cents. U.S. gasoline prices have been suppressed in recent months due to lackluster demand and growth from the U.S. and Chinese economies.
I would think, given everything that's going on, that crude could be even stronger. I mean, crude's at 74, and we've rallied sharply during this move, but it still feels like the market is maybe underwhelmed kind of with regard to this. It could be worse. Crude could be a lot higher.
Yeah, I mean, maybe people are just slow to buy into, to the whole deal until actually missiles start flying towards oil facilities. I mean, I've got to think there's more people than the U.S. that would be more than willing to help in some sort of a project like that. And I'm talking OPEC type situation. But what's it going to do? What's it going to do if you start attacking oil facilities? You're going to drive up the price of oil. And there's a lot of people that would like to see that. But I don't know. I'm like you. I'm surprised it's not even stronger yet. I kind of figured whenever we first came out with the story, when Israel was getting bombed, the strength we saw that day wouldn't have backed off as much as what it did. I was quite surprised by that. But I'm like you. It's underwhelming.
Okay, this is not an oil market show. It's a grain market show. I wanted to do a chart of the Bloomberg Commodity Index. This is going to be the fourth week in a row that the index closes higher in all likelihood. The index has rallied 10 or 11% from its August 2024 low. So not only do you have strength in crude oil because of this, you've seen strength in grains. You've seen strength in precious and industrial metals. Most commodities, vast majority of the commodities that we track have been higher to sharply higher over the last 30 days. So there's something going on here with the commodity markets that's not just fundamental to grains or crude oil. There's some general enthusiasm regarding commodities that we haven't seen in a long time.
Yeah, I mean, I kind of feel like there's some money flow, but at the same time, of course, the equities have stayed fairly strong. I thought maybe you would see a bit of a flight to safety, and anytime that you get, of course, closer to an election and, the craziness that involves that, and, the Israel situation as well. I don't know. But at the same time, Joe, I mean, equities have been strong. So, but I would agree that with many of these rallies, particularly in the grains, it's kind of hard to sit here and look at it and say, hey, fundamentally, we should be rallying $1 in beans and whatever over $1, and then 50 cents in corn, at the start of harvest, when people are getting phenomenal results. So yeah, I mean, it's got a heck of a lot more to do with money flow than what it does true fundamentals.
Okay, so you think the grain rally, big picture, and this is a question for me too. It's a money flow. It's maybe a geopolitical thing. You don't think it's a fundamental thing?
No, but at the same time, I think you and I were talking the other day, inflation is definitely affected essentially every part of our lives, over the last few years here. So is corn and beans not going to go to the levels that we expected them to go to with these type of stocks levels? That's a very distinct possibility. It's just that rallying 50 cents on these corn whenever you're going to post a 5-bushel national yield record, it's kind of a big deal. Yeah, it's not going to be the biggest overall crop potentially, just due to acreage, but at the same time, it's a big crop, and so you're not typically harvesting, in Central Illinois, in many cases, best crop ever, at the same time that you're enjoying a 50-cent rally in September. But I don't know. That's just my opinion.
It's interesting that you brought up the inflation thing. If you guys are premium subs, I had a chart of this in the email this morning. So I'd probably talk with you about this, Matt, in the past. Has inflation impacted corn prices in any way, shape, or form? And the chart that we had was kind of like this. So in the post-ethanol era, from call it like 2007 through 2020, the very bottom of the barrel in the corn market was $3 a bushel on the board, right? We went down to $3 several times, but we never really broke out below there. And now in this kind of like post-COVID environment, we went down to $3.85. And I think that that's maybe the bottom of the barrel for right now, at least. So that difference, 380 up to 385, if that's your new bottom of the barrel, the bottom of the barrel's increased by 28%. And over that same time, CPI since your last pre-COVID month is up 22%. So maybe inflation actually has impacted the corn market, and maybe our new low end is lower or higher than it used to be. Does that make sense?
It does. And I think it's a very distinct possibility. At the same time, I'm a little cautious, as I talk to growers that say, hey, should I lift all my hedges? Are we in a new bull environment? And it feels a little awkward saying, yeah, you should do that whenever you've got such a large crop. And by the way, you're still probably looking at a 2 billion-ish number, as far as stocks go, with this marketing year. So
Yeah.
You still want to have at least some sort of level of protection and risk management by all means. But at the same time, it's nice to see the possibility of what you just suggested, that, hey, we've actually seen inflation impact us to the level where, we can be bearish as can possibly be. And we've thrown a lot of bearish stuff at this corn market over the last several months, and only go to 385 instead of $3 like we did before.
Yeah, I guess that's a positive. I mean, it still sucks. We're still below cost, but
yeah,
it's something. All right, what about the dock workers?
So the strike has been temporarily resolved. The Dockworkers union negotiated a tentative agreement with the U.S. Maritime Alliance to extend the current contract and suspend the strike until January 15th. The two sides agreed to a 62% increase in wages over the new 6-year contract. Negotiations between the two sides will continue on other issues, such as the use of automation at the ports. It's anticipated that the bottleneck of cargo caused by the 3-day work stoppage will be rectified in about 12 days.
This new agreement brings hourly wages for a top dock worker to $63 per hour, up from $39 previously. President Biden spoke on this yesterday. He said, I want to applaud the International Longshoremen's Association and the United States Maritime Alliance for coming together to reopen the East Coast and Gulf ports. Today's tentative agreement on a record wage and an extension of the collective bargaining process represents critical progress towards a strong contract. So I guess we don't have to worry about this for the time being. For those of you guys who went to Costco and bought all the toilet paper, stop it, and you don't need to worry about it, I guess, right, Matt?
Yeah, I guess so. I still, though, Joe, I really like the video that guy put out. I mean, if I was going to negotiate anything, that guy's going to be my chief negotiator, because I think nobody wants to go to toe with this guy, but
Yeah.
I didn't think it'd last very long. I talked about it the other day, and none of us thought it would last very long, but I think he made a believer out of everyone that watched his video for sure.
Yeah, he did. Absolutely.
USDA released weekly drought monitor data yesterday. Hurricane Helene brought substantial rainfall to the southern and eastern regions of the Corn Belt. Drought conditions improved across Kentucky, Indiana, Illinois, and Missouri. Ohio also saw some improvement. However, 85% of the state is still suffering from some level of drought. Drought conditions worsened in Wisconsin, Michigan, and Minnesota, where the impacts of Helene were not felt. Small areas of Iowa and Nebraska also saw conditions deteriorate. The High Plains experienced above normal temperatures and minimal rainfall last week that led to drought conditions worsening across the region. When we look at the percentage of U.S. areas experiencing drought, corn country, 27%, soybeans, 26%, winter wheat, 44%, spring wheat, 22%, and cattle country, 31%.
Matt, the harvest window is wide open. We got a little bit of rain on the Illinois-Iowa border this morning. It's not going to amount to much, I don't think, but the forecast is very much open and very much warm. So things are going to move about as fast as they could possibly move the next couple of weeks, I would imagine.
Oh, absolutely. The one thing that really comes to mind, though, I talked to Caleb Hamer up there by Waterloo. He says they had like 3 combine fires, I believe, in the last 2 days, and then so it's dry as a bone, and that's concerning, So my thing is just freaking be careful, man. We always try to blow our machine off every morning just to get everything out of there, just in case, it could spark something. But it is getting drier, and it'd be very interesting, Joe. How does obviously with the advent of La Nina, will we get dry going into winter and start talking about that again? I don't know, but that drought monitor, a month ago, there wasn't hardly anything on it, and all of a sudden now it's pretty much filled with color of some sort. And so we were dry as a bone here, but then we got 2 rains that, pretty much disrupted us. But at the same time, overall, since the 1st of September, it's actually been pretty darn dry here as well. So I don't know. It would be very interesting. But you're right. The harvest window is wide open. So you got to think guys are going to get a lot done. But again, be careful.
So the harvest window's open. Where's the harvest pressure?
I mean, that's a good question. I think maybe this week, backing off just a shade. I do think that you're getting a fair amount of hedge pressure. But at the same time, you come in here this morning, beans bounce back just a little bit. So the harvest pressure has not showed up like you would think with this size of a crop. I don't know. It's been an interesting manifestation for sure.
Yeah, definitely.
New crop U.S. corn export sales were impressive last week. Net corn sales were well above pre-report estimates at 1.7 million metric tons. The weekly volume was the highest since November and up significantly compared to the prior week. Mexico was the largest corn buyer for the week. Net soybean sales were solid at 1.4 million metric tons. The print was down 8.3% versus the previous week. China was the largest soybean buyer for the week. Net wheat sales surpassed pre-report expectations at 443,700 metric tons. The print was up noticeably from the previous week and up 46% from the prior 4-week average. Japan was the largest wheat buyer for the week.
All right, I'll give you the bad news first. The bad news, and it was good last week, but soybean sales, despite the improvements, are not quite where they need to be. So we're up almost 3% versus the same period last year. So we're now above a year ago with regard to soybean commitments. But USDA's got this projection that we're going to increase exports by 9% this year. So while it's very early, you could certainly make the argument that USDA could be overstating soybean exports. The good news is that corn exports are up 14%. Corn export sales, the book, is up 14% versus the same period last year. And USDA is projecting an increase of less than 1%. So USDA, Matt, this is how you get the carry out below $2 billion for next year. You see a higher export number if these sort of sales continue. And also you see a higher ethanol number because the pace of ethanol production has been above where it needs to be.
Yeah, absolutely. And I think we're probably headed there. I mean, I did see a couple people come out yesterday with a yield increase. I mean, it's
Mhm.
probably not enough considering the demand we're talking, but you know, I guess I'm still cautious. I mean, I think the last few months kind of soured me a little bit on the market, and I don't know. I mean, you're still talking under two, right? And so it
Yeah.
seems like, well, if you get it down to 1.9, then what? And clearly, as you know, 1.9 is not exactly a bullish number. It's just not near as bearish as what 2.2 is,
Yeah.
or 2.3, like we were talking before. I do think it gives you some opportunities. Maybe there's some talk that, hey, we don't want to lose too many corn acres here, because what if we don't get a 183.6 again? I
Mhm.
mean, if you take corn acres down to 89 or 90 and then post like a 178 with a bad crop, so to speak, now you're starting talking about things tightening significantly because we built so much demand. So it's certainly a good problem to have. But here's the deal. I mean, as well as I do, the strong demand-led market actually has some staying power. So we built some demand. That's a really good thing.
There's a big divergence, it would seem to me, between the direction that corn fundamentals are going and the direction that soybean fundamentals
Oh,
are going.
man.
Like corn, the demand base is increasing. Looks like carryout's tightening a little bit. Soybeans, I mean, without a Brazilian weather problem, I just don't know if I see any of that. It seems like you're almost going to need to knock the yield down a couple bushels to really get us anything that resembles a story.
No, I mean, I couldn't agree more. It's concerning when you look at both balance sheets, whether it's world, domestic. Well, I don't know, and I think that could be one thing that even if we get a little bit of a bullish story going with corn, that could maybe hold the corn market back a little bit. Is how bearish could beans be? If Brazil does get all the beans
Yeah.
planted, and you're still talking to 170. I mean, now you're all of a sudden you're talking about world stocks in that 133, 134 range. That's gigantic. It'd be the biggest stocks and the biggest stocks to use ratio we've ever seen. And so you got to keep that in the back of your mind.
You could make an argument that the forthcoming Brazilian growing season, they're just starting with planting, is now a bigger deal for the market than the U.S. growing season is. You can make that argument. And the market may have a little bit of weather premium in it. If you're to look at it that way, go back 20 years, now like what used to be May, June, July in the soybean market, maybe that's now November, December. Maybe it's something similar to that. Or maybe you've got two big seasonalities that you've got to kind of be worried about because Brazil is such a big deal, So we could have there could just be some weather premium in here as it relates to Brazil.
No, absolutely. I mean, they're growing a bigger crop than what we are. I
Yeah.
mean, they're exporting more beans than what we are. So, I mean, that's where the weather market should be. I mean, I would
Yeah.
agree with you. I mean, there's no question about it.
Yeah, for sure.
U.S. money market funds have risen to their highest level on record. During the week ending October 2nd, roughly $38.7 billion was added to money market funds. The increase caused total assets to rise to a record $6.46 trillion. Approximately $321 billion was added to money market funds in the third quarter, an impressive increase over the previous quarter's $63 billion. Investment has increased despite the Federal Reserve beginning to cut interest rates. Institutional and retail money market funds also saw inflows during the week ending October 2nd.
All right, Matt. There's too much money out there. The stock market is 1% from all-time highs. You look at some commodities, your gold is an example, all-time highs. Where's housing? Close to all-time highs. One of the only things that is not is commodities.
Right.
And then you've got all this
Absolutely.
money you call it on the sidelines. I mean, earning better interest now, but there's a lot of money out there.
There's a lot of money out there, and so where do commodity get? I mean, you're right. Whenever we talked earlier with some of this money flow stuff, maybe there's folks that are taking a look at commodities and saying, "Hey, they've been beat up long enough.
Yeah.
We're going to go over here and invest." I mean, it's been interesting to see, the way the gold market has traded
Yeah.
here lately. I mean, people buying gold, at $2,600. Obviously, they think it's going higher. But wow,
Yeah.
I mean, I wouldn't have thought we'd see that. But we've got to hope this spills over into the ags. I mean, it would be nice if we were able to come in here and say, yeah, we did just raise one heck of a big crop. Yeah, being domestic world balance sheet doesn't look very good. But actually, people will still want to own this stuff. There's still value here, at $11, and that's a heck of a lot better feel than $9.50. And it gives you an opportunity, maybe, that the grower is going to see a little bit better, cash flow than what we thought we were going to see in 25, because it looked pretty rough about a month ago.
Well, your short covering event in the corn market is basically, I mean, I'm not going to say it's over, but they've covered 300,000 contracts worth of net shorts. I mean, the real time net short in the corn market's probably like 50,000 contracts. It was 356,000, I think, in July at its peak. So, I mean, you've absolutely seen some of this, at least short interest coming out of the grain markets, and maybe some long interest being explored here, which is super interesting. What did cattle do yesterday?
Cattle futures were mixed. Live cattle were down $1.42 to 22 cents higher. Feeders were down 75 cents to 72 cents higher. Box beef was mostly unchanged. Choice was 1 cent lower at $2.99.80. Select was down 28 cents at $2.68.78.
Cash market has been strong. Is that the deal? Part of it?
You bet it has. It's been fantastic.
Matthew, cattle market thoughts?
Yeah, same thing. I mean, I don't know. I'm not bullish here. I mean, I hate to say that. But man, this has been a heck of a good run. I'd be a little cautious. If I'm sitting on a bunch of cattle that I've got to get moved to market, well, I don't know. At least setting the floor into these things would probably be advisable, the kind of rally we've seen.
Outside markets on Friday morning, U.S. dollars off a little bit. Stocks fractionally higher. Bonds are flat. Crude oil is up another $1.23.74.94, and the November WTI was over 75 for a minute. Have a great weekend, guys. We'll be back on Monday.